We've just wrapped up the earnings season. U.S. earnings have been doing pretty well. Here's a stat. If you look at earnings outside of Magnificent Seven in the U.S., you're down 2% on the quarter in terms of growth, year on year for the quarter. With Mag 7, you're up double digit. So that tech earnings drive is still coming through quite strongly. And those fundamentals are driving the tech shares higher. So we still like the tech sector. It's one of our key sector overweights. Yep. And it's driven by fundamentals.
Is that going to be enough to continue to lift the market, though? Mm-hmm. That's the critical thing. You've got a lot of good news priced into that sector. We're just seeing Salesforce as an example maybe of what happens when you miss and don't give the market what it wants when you are traded at such lofty multiples. Are the multiples so high now that we're going to struggle to move the market forward? How do you get this market to go higher from here?
Yeah, I mean, there's certainly some dispersion within the sector. Some names are doing a lot better than others. But when that's something also clients have been positioning for. So we've started to see, to your point around what else other than tech, we've started to see a trend into European equities, into Japanese equities. Europe, for example, looking at ETF flow data, has had $10 billion of buying this year, which is the largest inflow year since 2021. And 2.5 billion of that, so a quarter, is coming from U.S. investors. So it's not entirely, in its entirety, domestic. It's not just European home bias. There is some foreign investor trend coming into this. And obviously, Europe is not really tech-tilted, so it's the other side of the coin. So that's an area that we're
How fragile do you think that sentiment is? How fragile, how quickly could that reverse?
Yeah, I mean, I think it's driven by three things. The ECB, obviously, we have the inflation number tomorrow, and we're expecting the ECB to potentially move in June. It's the last number before their June meeting, and expect them to cut rates more than the Fed. So that's a macro tailwind. But we are also seeing, and we were talking about the Spanish data earlier and the two-speed economy, but we're seeing a bottoming out in the macro data in Europe, which investors are liking. And then earnings. Earnings have seen a significant upgrade in Europe over the past 12 months. It looks as though we've left that slump of the past few years. How fragile? Of course, European sentiment is not always very sustained, but it's certainly an area that has gathered a lot of momentum. Clients are looking at it in two ways. Going more selective, so looking at fundamental and systematic strategies like the ones we have at BlackRock, focused on finding quality that you don't really get in the index. So going active, selective, to find quality that the index doesn't really reflect. Or going early cycle in sectors like materials and industrials through sector ETFs to play that bottoming out in the cycle that we're seeing in the data.